Good morning, folks. It's Harry Swaminathan of OptionTiger.com. Today is May 10th, and it's about 8:15 in the morning Eastern Time. And we're looking at our price line trade for today. If we have a short strangle, I had bumped up my positions to about 25 contracts on each side. The short on the put side is at 660. I have 13 contracts. And on the 650, I have 12 contracts. And on the call side, we have 10 contracts on the 800 call and 15 contracts on the 810. So this one has let's take a look at, see if we can analyze the risk profile here. Let me close it out. First of all, Priceline reported decent earnings, but they guided lower for the future. So it was 1 plus and 1 minus, and therefore you can see the stock is barely moving. This had an expected move of almost $45 to $50, but you can see that the move is barely $7. In fact, maybe even less than that. So short strangles are going to do very well. In fact, even if the expected move happened, which would have been about $45 to $50, we would have done very well on the strangle because we had a $75 buffer on each side, and I had spotted a volatility arbitrage where the monthly series was experiencing about 20 points higher in implied volatility. And so we were, this trade was based on the fact that we would capitalize on that, on that implied volatility crush. So let's see, we already have a profit of about 2,700 on this trade. Now let me just zoom in here, and you can see that price line is right here. So and we have about 9 days left for this series to expire, maybe 7 days. So that's even great. We have a max profit of 14,000 on this trade, and I think if we can keep it for the next 7 days, we'll capture the entire 14,000. But what we are going to see today is the volatility crush. You can see the volatility is almost 52%. And this is going to be coming down today, probably closer to the 30 level, maybe 32 or 33. So we're going to see a significant bump up from this volatility crush. The Vega value is 857. So for each 1% move, we should capture about $850. So even if it's a 15-point move, you can see that is almost 12,000. So this position is going to be doing very well today, and this is exactly what I had expected. So this is why I put out the trade for everybody, and hopefully many of you took advantage of this situation. So what I'll do is I'll come back after the market opens, and we'll follow up on this trade and see how it's doing. Thank you. Welcome back, folks. It's Harry Swaminathan. The markets have just opened. It's 9:30. Going to be 9:31 a.m. Eastern Time. It's May 10th, and you can see Priceline has opened up about 10 points to the upside. But let's look at our positions here. It's doing fantastic. So as expected, we got a volatility crush. We are showing a profit of 9,500 today. Total profit of 12,000 out of a maximum of about 14,000. So we still have 1,900 dollars left of profit in this trade. So there's a couple of things we can do. I mean, this is a fantastic profit, so we can even close it out right now and just say, it's okay. We don't need to wait for every little penny out of this trade, because we would have pocketed $12,200 dollars profit in 2 days. So that's a fantastic profit, and I am inclined to close it out, and right now you can see it's at about we've got $1,600 left. I'm going to just close it out. So this is how you take advantage of a volatility arbitrage, and we pointed this out. I hope many people took this trade, because this has turned out to be a fantastic trade. And this was expected, frankly. I mean, this was a very, very good trade opportunity. And very often people go to the immediate weekly series, which is a big mistake. If you try to understand the volatilities of the next series and see whether that is getting bumped up for unnecessary reasons. So yeah, so let's go take a look at Priceline's volatility situation just to confirm what we are talking about. As you can see right here, the May has collapsed to 26%. So this was 52% yesterday. It's collapsed to 26%. And that is what we are talking about. That is the arbitrage that we are talking about. There's no reason why this series should have been bumped up to 52. There was just no reason. So, but due to collateral damage, you will see many times in many stocks, you will see this kind of a bump up in volatility. And that's exactly what we are trying to take advantage of. So I'm going to close it out with about a $12,000 profit on this trade. Hopefully you enjoyed it. If you have any questions, please leave us a comment on this video. Thank you.